Hi, everyone. I'm Sarah Vancaster, Vice President of Product Marketing at Varicent, and I'm joined in this video series by two experts among experts. Martin Fleming is Varicent's Chief Revenue Scientist and former Chief Economist at IBM and Fellow at the University of Manchester. Danny Veksler is our guest and Managing Director at KPMG. Danny has over 15 years of experience in consulting sales and revenue teams on transformative journeys, advising companies of all shapes and sizes, from fast-growing startups to prominent organizations around the globe. Thank you both for being here. As you know, the goal of these conversations is really to explore some relatable trends that we're seeing across the broader market, the impact that these trends are having to sales and revenue teams, and most importantly, what these revenue leaders can do to combat these trends. So with that in mind, let's focus this conversation on what's going on in the broader global economy. Do words like disruption or unprecedented change, ongoing uncertainty sound familiar? I think they still do for just about all of us. So Martin, you're always monitoring inflation trends, interest rates, and other market fluctuations. From your perspective, how have these recent economic trends uniquely impacted sales and revenue leaders? And what does the outlook really look like for the broader economy as we start to look into next year?
Well, Sarah, you're right. There certainly has been a great deal of disruption over the past 3 or 4 years. The pandemic has brought significant change, not only to our personal lives, but to our business lives. And of course, as we all know, we've experienced a great deal of inflation, price and wage inflation, and a great deal of uncertainty. We should expect over the next year less inflation, a little bit less uncertainty, but a continuation of both. And if we think about first the sources of uncertainty, there, of course, has been a great deal of discussion about a possible recession. The probabilities and the possibility of recession seems to have dissipated to a great extent now over the past few quarters, and indeed, growth, at least in the U.S., has been quite robust. So the outlook has significantly improved. But nonetheless, risk remains. So another source of uncertainty that we've certainly seen a great deal of is around supply chains. We ought to expect to continue supply chain disruption as a source of uncertainty. There are possibility of labor action and strikes in various industries. There are, of course, a shortage of workers. The availability of workers continues to be an issue, which can cause issues from a supply chain perspective. And of course, as the Chinese economy continues to adapt and adjust, there may be certain products which need to be imported, which may or may not be available. Another source of uncertainty, as we all know, is around the weather and climate events with wildfires and floods, tornadoes, hurricanes. All of this creates disruption in how work is being done. Then the final source of uncertainty really is around new opportunities, the extent to which reshoring is occurring. There are new customers, perhaps, that are appearing because of reshoring opportunities. And there's also, of course, the appearance of new energy sources, renewable energy sources, which are creating new sets of customers and new demands. But then the other side of the outlook for the next year is around inflation. We ought to expect to see less inflation. We've passed the peak. We've brought rates of inflation down, largely because goods prices have been declining. But we still see some meaningful inflation around services prices, and that we should expect to continue. And then finally, around energy prices. With the strength of the North American economy, energy prices are expected to continue to increase, adding to the difficulty of bringing inflation down to targeted levels, which in the U.S., the central bank is deeply committed to. So, Sarah, that's a roundup of where we see things headed and what it might mean for sales leaders and C-suite executives in the year ahead.
Thank you, Martin. Certainly no shortage of economic headwinds, but I heard some optimism there as well. And Danny, I know these challenges sound familiar to you. So knowing that KPMG and your team is working with a diverse group of organizations and executive teams, can you share some examples of how you've helped sales teams find new ways to stabilize sales performance, even as these economic uncertainties continue to linger?
Yeah, absolutely. Thanks, Sarah. Thanks, Martin. You know, dead are the days of revenue at all costs. One of the biggest manifestations of interest rate hikes among our client base is inorganic growth is harder to come by, which is driving focus to paths toward organic growth and really getting disciplined around controlling cost of sales and relative to revenue performance. One of my current clients that is delving into the public markets through an IPO has identified the need to really get their cost of sales under control, align it with, pricing in the marketplace in order to drive greater margins, which are going to be, key aspects for their public, valuation as an enterprise. And, as they've brought, as this organization brought, new leadership in to manage revenue really across all of their go-to-market functions, there was an expectation around being able to take a data-driven and insight-based approach to how do I size my sales organization right? How do I create the right swim lanes across all of the necessary revenue channels? And how do I effectively, drive a healthy distribution of performance across my sellers? And in really evaluating, the need for these insights, there was a recognition that there hadn't been the right level of investment in building a data foundation to be able to do this. And so one of the primary investment vehicles that they had doubled down around was bringing KPMG in order to build out that foundation so that they can take a very intelligent approach to deploying their capital and ensuring the revenue performance that was required while maintaining margin and EBITDA in order to ensure their enterprise value stayed at a level that was, going to be lucrative for their shareholders in the public market. And what is the important takeaway here is themes around looking within the four walls of your go-to-market, building the right foundation for data and insights, and using that in actionable ways in order to make sure that your cost of sales stays healthy relative to revenue performance, and actioning changes in a, quick, agile manner that is going to allow them to really have a successful IPO.
It's a great example, Danny. And whether an organization is on that path to going public or even just looking to grow wherever they are in their maturity journey, this is just a great example of how revenue teams are just increasing the diligence and rigor to make sure that they're economically growing efficiently and that their strategy is really servicing, like you said, not growth at all costs, but really smart, efficient growth. At Varicent, we're helping our customers design, amplify, and really optimize their go-to-market strategies and creating a more connected, efficient path to revenue, from the figuring out what the goals you need to achieve are and what that best path to achieving those goals really looks like. For anyone tuned in who is really trying to continue to figure out how to navigate all of these market disruptions that Martin was talking through, we at Varicent can really help deliver confidence in building go-to-market plans that help drive sustainable, efficient growth. So Danny and Martin, thank you both for your time, and for everyone tuned in to hear these two discuss additional challenges that revenue leaders are facing. Continue to explore this video series on controlling revenue volatility.